What's going on YouTube? Welcome to the Credit Plug channel. So for today's video, I wanted to talk about shelf corporations. I've been getting a lot of questions, people asking, should they get a shelf corporation? So in today's video, we're just going to go over some of the advantages as well as some disadvantages that you need to understand when it comes to shelf corporations. So what exactly is a shelf corporation? So basically a shelf corporation or an age corporation is pretty much a company that was formed several years ago, whether that's a year, 2 years, 10 years, 25 years. And one of the advantages I would say about a shelf corp is that with shelf corps, they have age. Now with age, there's a lot of advantages when it comes to business credit. For example, you have certain vendors where you can't apply to unless you have a certain amount of time in business. The time in business is based on when the articles of organization were filed. I mean, there's a lot of different loan products, lines of credit, where you have to be in business for at least 2 years, 3 years, 5 years. So there's different thresholds in terms of time in business where certain credit products are going to be able to unlock. Even as a new business, even if you have good credit and good income coming in, there are just certain products where you're not going to be able to qualify for because the time in business. Now, the advantage with the shelf corp is that it's already aged, meaning that, it's already going to fit the time in business qualification. I also wanted to go over some of the disadvantages of a shelf corp. Now, the main disadvantage when it comes to a shelf corp is the fact that in most cases, these are just dormant companies, meaning that there's no activity, there's no transactions, there's no sales. Usually you're not going to get a bank account with any activity that's associated with the shelf corp. So generally when you're buying a shelf corp, you're going to have to establish a bank account and you're going to have to generate some activity if you actually want to leverage the shelf corporation to get funding. So it's not just you buy a shelf corp and then you could just walk into American Express or Bank of America or Chase and try to get a business loan. It's not going to work that simple. And the reason why is because you're still going to have to provide financials, right? You're still going to have to provide tax returns. And the problem that shelf corporations will run into is what's called a 4506T. Now, a lot of what you hear online, I feel like it's just regurgitated. People who don't really even know what the process is like when it comes to commercial business loans and lines of credit. It's going to require documentation. You go in there talking about your Paydex score. Oh, I got an 80 Paydex score. They're going to say, okay, well, what about your tax returns? What about your bank statements, right? So you're still going to have to supply additional data points. It's not just, oh, I have this age corp. Let me get this $100,000 or $500,000 business loan. It's not that straightforward. You're still going to have to provide other data points that may not come with that shelf corp. Now, can you go out here and get business vendors, right? Can you get Home Depot and Sam's Club and Menards and Northern Tool and all these different vendors? Absolutely, because the vendor credit is going to be based off of mostly the business credit. So your Dun & Bradstreet, maybe your Experian, as well as the time in business. So yeah, you can go crazy when it comes to the vendor credit. But when we're talking about the business credit cards, the business lines of credit, the business loans, you're not going to be able to just get that based off of your Paydex score. And I hear this talk about, oh, if you have 14 accounts, then you don't have to supply financials or bank statements or anything like that. That's absolutely untrue whatsoever. Just because you have a business credit profile does not mean that that's all you're going to need. You're still going to need to provide financials. Now, the problem that shelf corps are going to run into is what's called a 4506T. Now, anyone who's gone through any type of commercial financing application, and in a lot of cases, let's say when the amount is over a certain threshold, let's say, 50,000, 75, 100,000 in certain cases, a lot of lenders are going to ask you to do a 4506C. So a 4506C or 4506T, these are tax transcript verification. So they're actually going to be requesting your tax transcripts for your business directly from the IRS. And this could be actually personal and business taxes. So for any beneficial owner, they're going to also want to see your personal taxes as well as the taxes for the business. So the thing with the 4506T is that there's no way around that. If you didn't file taxes for the business, then it's not going to be a good look. And, you know, you have this 10-year-old, 5-year-old business, but there's no tax returns filed. That's one issue. You're also going to run into the issue of banking activity, right? A lot of people think that you could just manufacture banking activity doing P2P transfers from one account to another. You have to understand that a lot of these lenders now have artificial intelligence. You know, they also work with other service providers that can analyze the banking activity. So it's not just money sitting in an account or money going in and out. They're actually looking at the origins of those deposits. So is it coming from a POS system? Are these cash deposits? Are these coming from, you know, PayPal, Stripe, Square, or any other third-party payment remitter, right? So they're looking at the origin of the payment. So don't think you can just go in and, you know, do some Zelle transfers back and forth. You're still going to need legitimate transactions within that business to really pass the test when it comes to your banking activity, when you're trying to apply for, you know, different types of loans and lines of credit. So I say all this to say that a shelf corp, there are certain advantages when it comes to shelf corps. And so when you do go into a bank and you have your shelf corp, just understand all the other data points that you also need to have. So aside from just building your business credit with the shelf corp, you're also going to want a business bank account. You're also going to want an accounting software. You're also going to want business activity, legitimate business activity in the business bank account. You're also going to want to have tax returns filed if you plan on applying for business loan. Now, just because you were able to get a PPP or EIDL loan with a shelf corp doesn't mean that you're going to go into a commercial lender and, you know, get the same result. That process right there were no checks or balances in place. There were no safeguards to really verify information. So I just wanted to throw that out there because, you know, I feel like there's a lot of misinformation about, you know, getting business loans, shelf corps, business credit. I'm not knocking business credit. I think everyone should build business credit if you're a business owner, but just understand you're going to need more than just business credit to get the high limit loans. You're going to need bank statements, some cases tax returns, and then a lot of times now they're also going to want your accounting software, because instead of actually emailing them business financials, your balance sheet, you know, things like that, your profit and loss statement, a lot of lenders can just plug directly into your accounting software and see what your revenue is like, you know, what your expenses are like, what your balance sheet looks like. When it comes to, like, let's say the business lines of credit, the business loans from commercial lenders, or even some fintechs, right? They're going to want to see these financials. They're going to want to see your bank statements. They're going to want to see sometimes tax returns. So your business credit scores are not enough when it comes to the bank loans, right? So that's all I wanted to cover in today's video. Let me know your comments and questions right down below. And until next time, take it easy and we'll talk to you soon. Peace.